market movers. This is The Pulse.
Morning, welcome to The Pulse. I'm Guy Johnson here in London. Let's talk about the situation we now find ourselves with this Thursday as we head towards the weekend and talks that potentially could take place. The US Vice President, J.D. Vance, will lead, we understand, the US delegation to Islamabad this weekend. We understand there are going to be direct talks with Iran. President Trump, meanwhile, says US forces will remain in the Middle East, vowing to ramp up attacks if a deal is not reached. This as Tehran says several terms of the ceasefire that it thought it had agreed with the United States have been violated.
No ceasefire ever goes without a little bit of choppiness. What we have been very clear about is that we want to stop the bombing. We want our allies to stop the bombing, and we want the Iranians to do the same thing. We're seeing evidence that things are going in the right direction, but it's going to take a little time.
J.D. Vance, the Vice President of the United States. Let's get the latest now. Bloomberg Horizons anchor Jumana Basechi joining us out of Dubai. Jumana, good morning. What is the status of the ceasefire? What do we know right now?
Well, you heard J.D. Vance there saying that things are going in the right direction. And I would say overnight, things seem to have calmed down. Very tenuous ceasefire. Still, J.D. Vance described it as being a fragile truce. And indeed, a lot of attacks still went on throughout the course of the day yesterday. Many missiles intercepted over here in the UAE. Some drones also intercepted in Saudi Arabia, over Kuwait as well. And then Iran also reporting attacks on one of their refineries in the early hours of the morning. But the biggest front that opened up really was in Lebanon. And remember that early yesterday morning, the Israeli Prime Minister said that while Israel's official stance is they support the US-Iran ceasefire, from their perspective, it does not apply to their ongoing front with Hezbollah in Lebanon. And what we saw yesterday was the bloodiest day of attacks since the beginning of the war. Israel launching over 100 strikes in over 10 minutes in Lebanon with a death count of more than 200 and really prompting a lot of the international community to say, what is going on here? And because there was a lot of disparity between what the US side had put forward versus what Iran claimed was in the ceasefire deal, which is that Lebanon was part of the broader regional ceasefire. So this is a big question as we head into the weekend. And of course, those direct negotiations are going to be taking place. That's been confirmed now in Islamabad. Pakistan have been mediating quite aggressively to get this through. We have confirmation that J.D. Vance, Steve Witkoff, and Jared Kushner will all be attending from the US side, and the Iranian ambassador to Pakistan confirmed that their own delegation will be arriving this evening. So on the agenda, obviously, they're going to be talking about whether Lebanon will be included in the ceasefire, but more importantly as well, for the rest of the world, I would say what is going to happen with the Strait of Hormuz, because effectively still remains shut, Guy.
It does. OK, tell me what's happening on the water. What are we seeing? What do we expect to see today? Any sign that it's reopening?
Well, Iran is still maintaining that they should have a right to sovereignty over who and what passes through the strait. Iranian news media overnight reporting that they've set up a two-way transitway for ships, those who want to leave and those who want to come in, and that any vessel coming in needs to get permission from the Iranian armed forces and stick to those routes specifically. So once again, sort of reasserting their right to authority and sovereignty over what passes through the Strait of Hormuz. And of course, as we've spoken about, this is an unacceptable outcome for nations around the world. Pretty much everyone has gone on the record saying that this is an international free shipping route and it should go back to the way things were before the war. But it has emerged as a key point of leverage from the Iranian perspective as we get into those negotiations. One new thing that I would say as well is a meeting took place yesterday between the US President and NATO Secretary General, which we are reporting, Bloomberg, that the US President has asked very clearly for NATO and for European allies to articulate exactly how they're going to help with the reopening efforts of the Strait of Hormuz once the conflict ends. And many of these European countries have said, while they don't want to get involved militarily in the war, they're happy to assist with the maritime operation once the conflict is over. And so the US is really pushing them now to see exactly the extent of those efforts, the technicalities, where they can come in, where they can help. But at this point, we still don't have a lot of details. And Iran are still insisting that they will have control of anyone who enters through, will limit the number of vessels, possibly to around 10 to 15 vessels a day, and potentially introduce a transit fee too, all which are non-starters.
Yep. We don't know. The market is trying to price in a lot of unknowns at the moment. Jumana, thank you very much indeed. Jumana Basechi joining us out of Dubai with the latest on what is happening in the region. Let's try and talk about the economic impact of all of this. Ludovic Subran, Chief Investment Officer and Chief Economist, joining us from Allianz. Good morning, Ludovic. So how are you thinking about what happens next? Inflation looks like it's going to be an issue. How are you trying to understand, model, kind of decide what inflationary impact we're going to see from what we're getting out of the Gulf right now?
Well, look, something is sure is that markets got a bit ahead of themselves, because now, you see the sloppy ceasefire and, the fact that this conflict may become a regional conflict and stay on. I mean, Jumana just talked about Checkpoint Charlie in the middle of, 20% of global trade, right? Iran mentioned yesterday that they wanted to put crypto or yuan payments, right? So there is still a lot of friction embedded in global trade. So that's inflationary. Oil is going down a bit, but the energy, cost altogether, it will take some time. We don't see tanker count going up. So we have the US inflation tomorrow. I think there's going to be an expectation that it goes to 3.3, 3.4%. I think in Europe, we're also very concerned about the reminiscing effects, the stickiness of the inflation. And as mentioned several times on Bloomberg, I guess, people are worried about these stagflationary pressures. That is not only like 22, where you had a lot of pent-up demand before. This time you have, pre-existing conditions of lower growth and lower buffers. So everybody is holding their breath a bit, because the next couple of quarters are going to be essential to understand how much this has tested a bit the resilience of some economies that were a bit in the middle through a period before the war.
Ludovic, how much capacity do European governments have to protect their citizens from this energy shock this time round?
Well, the question is, when I look at what Asia is doing and all the sobriety measures that are actually good to maintain fiscal, orthodoxy, I'm very worried about all the announcements that came up and that were very profligate on the European side. So I hope that we won't completely buy out this crisis for many reasons, from the price signal to the fact that we don't have so much fiscal space. But the short answer is, I think there is a feeling here that they could do a lot more. My concern is that if we do again a lot more, we're going to pay it in the cost of debt come 25, 26 or 27. And so that's something that limits a bit our ability to act. So the political spiel is, we have a lot of room to maneuver and weaponry at our disposal. I would be a bit more cautious, and I hope that we're going to be a bit more balanced with rationing measures and price support measures, which is really the way we do it usually, and this is very costly.
What economic impact would rationing have?
Well, less growth, right? This is demand destruction. So I think that's the main concern that all these leaders have, because they entered this crisis with less growth momentum than say the US. But I think it would be smarter for us to preserve the midterm, buffers should this crisis be on and off for quite a few months, right? So I would say the immediate cost, for example, of some form of rationing would be in the tune of 0.1, 0.2 percentage point of growth. If we look at what the Asian countries have done, of course, Asia is much more dependent on the Strait of Hormuz, right, than we are in Europe. But I still think it will give a bit of this idea that we could be a bit more innovative and a bit less, spending our way into this crisis like we did in 2022.
In terms of where that gets priced, where do you think it is? That feels like that would be better news for the bond markets, but worse news for the equity markets. Would that be a reasonable assessment?
Well, it's very interesting that the bond market reacted much more strongly than the bond market. I think, your guest just before was mentioning, I think it's a question of this term premium and then this inflation issue. And maybe also we've learned that firms that are listed, that that represent the equity market, have much stronger pricing power than we imagined in the beginning, right? And they have stronger buffers. But that's a bit simplistic to me. I think this time around, the main question everybody has is the margins of a lot of these companies have been eroded. They need to find a lot of capex for the AI cycle. And so this energy shock is not very welcome. So I would be a bit more cautious on equity markets. And on bond markets, I think the base rate is already higher. So now the main issue is the credit spread widening. And you saw yesterday, credit spread tightened so fast. This is not, this it cannot be right. For me, there is a bit of too tight to be true type of a spread situation right now. So I would be expecting a lot more triaging and selectivity among credit risk, because this is a credit risk shock 101.
Why do you think markets, after yesterday, it feels like the market's got a lot of good news priced in? What does it take to get us to realise that there are other scenarios? Particularly, equity markets in particular feel like they've got a lot of good news priced in. When do we start to price in the fact that there are other scenarios? Is it when shortages start to show up? When do you think the penny drops?
I think this week is a bit the first week that we're going to see the last drop of antebellum oil. So now we're going to see a bit the reality of prices. Before, it was a lot of volatility on the oil price, but basically we have seen there was still a lot of oil coming from pre-war into the pipes, right? Now is the moment where we start to see, okay, this is the reality of the demand and supply. And the ceasefire happens at a very timely moment to avoid that there is a stronger reality check. So that's why I think equity markets have reacted so strongly, because it was a moment of truth that was postponed somehow. But I believe the moment we start seeing that there are more restrictions, that there are more disruptions, that there is a lot more scarcity economics, I think for the travel industry, for example, that has rebounded the strongest yesterday, I think that would be a moment where, for jet fuel, I mean, imagine the type of restrictions some companies will be facing in the next few months, right? Just because of the 172 million barrels that didn't go through, and that cannot be recuperated in the next week or so. So it will take time, and this will be choppy. And I think that's where I expect that this will start kicking in for some of these companies that have, I would say, less good financial situations to start with.
Ludovic, always a pleasure. Great to get your analysis. Really appreciate it. Ludovic Subran, Chief Investment Officer and Chief Economist, joining us from Allianz. Coming up next, we're going to talk cybersecurity concerns amid the push for simpler data protection rules within Europe. The chair of the European Data Protection Board is going to be joining us. That's next. This is Bloomberg. 16 minutes past the hour. I'll try and get that out. Good morning. You're watching The Pulse. I'm Guy Johnson. US futures are negative. NASDAQ futures are negative. We're down by around 0.5%. Really solid day yesterday, though. Tech stocks certainly having a very good session. European tech stocks, let's talk about European software stocks, under a little bit of pressure. This after Anthropic launched Claude managed agents and Meta unveiled its new AI model. Meta's debut, the first, of course, since Chief Executive Mark Zuckerberg embarked on a multi-billion-dollar overhaul of the company's artificial intelligence organization. Let's talk about this. Bloomberg senior strategist Neil Campling joining me around the table. So, MuseSpark. So Llama's gone, Llama's out, MuseSpark is in. This is closed proprietary stuff that we're talking about here in terms of the new model. Zuckerberg has spent an epic amount of money getting here. How good is it?
That remains to be seen. However, I think the most impressive part is the fact it's only taken 9 months from the concept on the drawing board to a fully fledged model being released. This is kind of telling you the power of these models, how quickly these new AI supermodels can be created. And this is the first product out of this stable. So, you know, we've had the announcements last night. We'll then get more data coming out in terms of the next few weeks to see how successful it can be. But as we've seen with other players in this market, OpenAI, Anthropic, Google, etc.,
how do they monetize this? Is it easier for Meta to monetize a product like this, given what they have already?
Absolutely. If you have all of that data, the key is data. The value is in the data set.
Yeah.
The reason that Meta and Google probably have advantages relative to Microsoft is that they own that data. AWS or Amazon own the data. Microsoft owns some of the data, but some of it is OpenAI. So it's about owning the data. If you can mine your own data sets and then create these tool sets and these agentic AIs on top of that, they could be super powerful.
Is Anthropic once again kind of adding to the SaaSpocalypse story that software vendors are dealing with right now?
I want to try and put some numbers around this if I can, Guy.
Yep.
We talked about $30 billion of ARR, the annualized revenue run rate from Anthropic, talked about earlier this week, relative to $10 billion last year. Now, I've seen research today that says they could be at a $100 billion run rate by the end of that year, the end of this year. Put that in context. For massive US public listed companies, which are Salesforce.com, Adobe, Workday, and ServiceNow, Anthropic's number, if they get to that level, is 11 times greater than those 4 companies combined. So SaaSpocalypse, absolutely, that's a big, big risk.
Talk to me about, let's get to data centers. Let's talk about Oracle. Well, let's talk about PIMCO and Oracle. PIMCO's looking to offset some of the risk by the looks of things, trying to kind of sell off some of the Oracle debt that relates to some of these data centers that Oracle is trying to build for some of the LLM guys that we've just been talking about. Why? Is there a signal in this?
This package of debt has been on the block since January. So it's taken a while to get to this level where they're now testing the market to see the appetite. We saw the CDS spreads for Oracle blow out last year because of concerns. Now, Oracle does face a different balance sheet issue relative to many of the other hyperscalers. Many of the big tech firms are massively free cash flow positive. Oracle's not, and Oracle has net debt on the balance sheet. That's the big difference. So PIMCO definitely going to be testing the appetite for debt for AI build out for sure. We'll see how that goes.
Let's take a step back. Yesterday was a really big day in terms of risk on. We have got very optimistic, particularly in equity markets, very quickly. And there's a lot of good news being priced in. What is you hear from a lot of trading desks. What are you hearing this morning in terms of kind of where we now are and what the market is thinking about today, tomorrow, into a weekend?
I think the key word there is what you finished up with, the weekend. Until Saturday's conversation that's going to take place, it's very difficult for traders to put more risk on until event. Now, yesterday's short covering appeared to be, from data we've been told, it's the biggest short covering day by the hedge funds in over 4 years. So that means it's a bigger short covering day than we had on the Liberation Day and the tariffs last year. Big number. So to expect follow through from that when we've still political noise is the key outlier and risk out there. I think we'll have to tread water until the weekend.
It felt like the CTAs also ran out of steam by lunchtime.
Absolutely. Yeah, we heard that, actually. We heard that from a couple of trading desks. That by midday US time, the CTAs were done with that positioning. And then you didn't really see the active managers coming through thereafter. And if you look at volumes on the MSCI World Index, we went back above the 20-day average, but not by a great deal. It's still well below numbers we saw in January and February. So it feels like a holding pattern until we got a clearer passage from here.
Wait for the weekend. Neil, great to see you. Thanks very much indeed for stopping by to see us. Senior strategist Neil Campling here at Bloomberg. Let's change gears a little bit. The EU is pushing to simplify its data and privacy rules in a bid to boost AI technology and compete with the United States and, of course, China. This amid concerns the current geopolitical uncertainty could leave some jurisdictions more vulnerable to cyber attacks. I want to take you to Brussels. Our Chief Europe correspondent, Oliver Crook, standing by with more.
Yeah, that's right, Guy. I mean, listen, in the age of AI, we knew before that, in the age of social media, the sort of preciousness of data as a sort of commodity that has only been sort of invigorated now by the sort of boost of AI. And so we're very pleased to be joined by Anu Talus, who's the chair of the European Data Protection Board, speaking to us today here in Brussels. Thanks so much for joining us today. Thinking about AI, we think about all the issues that it sort of generates in the very abstract. From a data protection sort of standpoint, where we have this sort of mass scraping of the internet, what kind of issues does that throw up specifically for individuals?
Well, when we are talking about AI, there is a lot of processing of personal data involved. It is either when you're creating the models or when you're using the models. You very often process personal data. So this is, of course, a topic on which we, the data protection authorities, we have been focusing already for quite a long time. So we've been working on this topic for, maybe I could say even years. We, for example, delivered an opinion on this topic. This is already over a year ago. At the moment, we are working together on joint guidelines with the European Commission on the interplay with the AI Act and the GDPR. So there is a lot of work done in this field, and of course, like you said, it really relates really strongly with the processing of personal data as well. Of course, not all the AI models, but generally speaking, it very often involves the processing of personal data.
And thinking about a sort of policy architecture of how you design that, how do you design that in such a way to both ensure the sort of safety of data and sort of the individual value of the data for the individual, while at the same time not hampering innovation in a time when you have many jurisdictions like the United States that are basically don't want to regulate because they want to be number one?
Well, this is a very good question. Of course, it's important to start to think about these matters already at the very beginning, early in the process. And when we are talking about the competitiveness and the regulation, they are not necessarily mutually exclusive. If you think about, for example, some sectors like aviation or let's say financing sector or banking sector, they are quite heavily regulated. But at the same time, they are also very competitive sectors. Would you like to put your money in a bank you don't trust? Or I don't know, to take, buy flights from an airline company you don't really trust? It's about creating trust, and this is the same element also when we talk about technology and how important it is that people can trust the technology they use.
And so one of the things you also oversee and think about is data transfer. And again, going back to the moment of trust, there's a very, very low level of trust between the United States and Europe at the moment, and real questions about building European sovereignty to ensure that, say, for example, an American company that has European data can't be forced by a government willing to leverage almost anything to give that data. How do you think about that? And do you think that can United States companies be trusted with European data?
Well, the question of data transfers, I think it has been quite topical for a long time. Yeah. And now, when the data privacy framework was put in place, we, the EDPB, we did deliver an opinion together with the European Data Protection Supervisor. And in this opinion, we were really focusing on the redress mechanism, on the judicial remedies. And this is, of course, also something what we will be focusing on when there will be the biannual review. Other than that, it is the European Commission which monitors how it functions, the data privacy framework.
And a word on GDPR, because this is now a legislation that has been in place for about 8 years. How do you appraise it today? There's been obviously a lot of criticism that it makes, doing business digitally in Europe a lot more difficult versus the privacy that it offers.
Well, I think that, the digital environment itself is getting more complex. So there are increasing number also of laws, legislation. So it is not only about the question of GDPR, it's also about the interplay between GDPR and the other legislation. We, the regulators, we have recognized the call for the simplification and the need to simplify some frames. And what we have done here, we have actually gathered together last summer in Helsinki, and we made a commitment. We made a commitment with the approach of GDPR made easy. We made a commitment of enhanced stakeholder cooperation, and we made a commitment to focus on cross-regulatory cooperation. And these all, they have the goal of clarifying the existing legal framework. And
Well, Anu, Talus, thank you so much for your time. That's the chair of the Data European Protection Board, speaking to us here in Brussels. Much more after the break. Thanks very much. This is Bloomberg.
Welcome back. You're watching The Pulse. I'm Guy Johnson in London. What do you need to know? Okay, let's start with the risk rally. It is fading. Iran saying that the ceasefire agreement with the United States has been breached. Both sides, we understand, heading to Pakistan for direct talks. We'll get to that in just a moment. Oil rebounding after its biggest one-day drop yesterday. That was the biggest drop since April 2020. The Straits of Hormuz still effectively blocked. Again, we'll come back to that story in a moment. And Bloomberg understands that the White House wants specific military commitments from European allies on how to reopen the crucial waterway, with Trump once again lashing out at NATO members. Okay. The White House saying that the US Vice President J.D. Vance will be leading a delegation to Islamabad for direct talks with Iran this weekend. This as fighting continues in the Middle East. In a post on the social platform X, Tehran's ambassador to Pakistan said the Iranian delegation will arrive tonight. Fatih Mangi, Bloomberg's Pakistan bureau chief, joining us now. Let's talk about, first of all, what we understand is actually happening. The Pakistani Prime Minister says the ceasefire has been violated and that talks, or at least the spirit of the talks, have been broken. I'm also hearing that the delegation from Iran may or may not be going. What do we know at this point about what these talks are going to deliver?
Well, I think, with what you said, I think, one thing that is quite clear right now is everything is quite fragile. It's not glued together very well, and things can go south or north really fast. But what we know for now is that the delegations from the US and Iran are expected to come to Pakistan, Islamabad precisely. Initially, talks were expected to happen on Friday, but they have been moved to Saturday now. There is a massive lockdown in Islamabad. Mobility has been confined. The most important parts of Islamabad are now under strict lockdowns and checkposts, so nobody can get in and out without any security clearances. So talks are going to happen over the weekend. Precise time of when each delegation will come, all of those are a bit, here and there right now, but talks for now are happening.
What do we know about what they're going to be talking about, what the basis of the discussions are going to be, and how far apart they are starting?
So they're starting quite far apart. It's been quite clear that there's a lot of distrust from all sides, and Iran has been mentioning that multiple times as well. We understand from our conversations that the ceasefire was broken, and there was discussion between Pakistani and American authorities on that too. That if we want the ceasefire to hold, then these attacks need to stop. And the ceasefire was announced only after some assurances were given to Pakistan that some attacks will not happen anymore. So as I said, things are very fragile, quite fluid. But right now it seems that talks will happen. The key issues that will be discussed is the passage for Strait of Hormuz. We understand uranium enrichment, dilution, and Iran will also talk about sanctions being lifted.
Fatih, thank you very much indeed for the update. We'll look for further updates over the next few days. Fatih Mangi, Bloomberg's Pakistan bureau chief, joining us from Islamabad. He mentioned it there, one of the critical issues, the Strait of Hormuz. At this point in time, it still looks largely blocked. Ship owners are trying to basically understand if they can safely transit, what that will mean. Now, earlier on, Anna and I caught up with the International Maritime Organization. It has pushed back against the introduction of universal tolls on the Strait. We spoke to its Secretary General.
The plan that we're making at IMO and that we're working on, it's based on international law, that it's in place. And this is why we're not looking at scenario B into introducing tolls that have not been internationally agreed. This is a dangerous precedent, and that's why it's important that when countries come over and they all uphold the freedom of navigation, and is one of the main statements that is made, this is the way that we will continue to work forward. We have already outlined the operational ways that these transits can continue to go back to normal. What we cannot have is this different or parallel approach when another country introduces a different mechanism that is not in line with the international practice, and we don't even know if it guarantees the safety of the ships.
Arsena Dominguez, the Secretary General of the International Maritime Organization, pushing back hard on the idea that we could see tolls being introduced. He says this is a piece of water that needs to go back to the original plan that was in place before this conflict, i.e. freedom of navigation. No plan B. Oil bouncing back, because at this point in time, that is not available. Freedom of navigation is not available. We saw a massive drop yesterday, but you're finding yourself in a situation where now the waterway is still closed. And Iran's Fars news agency reporting that the passage of tankers through the Straits of Hormuz is and will continue to be halted as long as Israeli strikes on Lebanon continue. Let's get a sense of what is happening here. Bloomberg's Middle East energy reporter Anthony DePaola joins us now. Anthony, what is it going to take to get these ships moving? The ceasefire looks really fragile. You can understand why ships' captains, ships' owners are being very cautious right now.
Yeah, good morning, Guy. Well, it's not even clear at what stage the opening of the Strait of Hormuz is in the whole ceasefire process. Initially going into it, one of the prerequisites for a ceasefire from President Trump was that there be an immediate reopening. Now it looks like the fate of Hormuz and how it's going to be managed is subject to the negotiations. What we're seeing right now clearly so far is that it's not fully opened. Iran is still expressing its control over Hormuz in terms of wanting vessels to get clearance from them, potentially collecting these tolls. Although we're getting different information about that as well, too. And just unclarity for the ship owners who are trying to go through there. They don't know if it's safe yet. A lot of the reporting that we did yesterday on some of the shipping agencies were saying, it's not yet clear, it's not yet safe, so avoid going through. So they're going to need to see lots more clarity, an expression that they can go through safely, and that there is a permission, either a permission system or a full opening. So that's what we need to see in order for those barrels to come out. A lot of those vessels trapped inside the Gulf haven't been able to move out yet, so we need to see them move out first. And then if that's safe, then we might see vessels trying to go back in to pick up oil and allowing some of those producers to resume production, Guy.
What do we know about the ships? Are there ships trying to make the passage now?
In terms of oil tankers, we've seen a couple that have moved closer to the mouth of the Persian Gulf at Hormuz. So we're watching those carefully now to see if they do go through, if those vessels do go through. Yesterday, we didn't really see anything other than that kind of normal Iranian traffic. Iran has been letting, of course, its own vessels go through. They've shipped some of their own crude cargoes to China, even during the war, and they've been loading and exporting at roughly stable levels throughout the war as they've gone through Hormuz. But now we're looking potentially at some additional tankers going through, some cargoes that are tankers that are apparently carrying Iraqi crude, Saudi crude. So this would be new in that we're getting different barrels from different countries on the market. That's not to say that the Iraqis or the Saudis are agreeing to this passage, because these cargoes are already on Chinese-owned tankers, but this is another tanker operator that hasn't gone through yet itself, so that would potentially be another owner going through with different cargoes on there, so not just the Iranian barrels, but still mainly going to China. So we've got a little bit of movement there, and we're watching to see if those tankers do go through the Strait today, Guy.
Anthony, we'll keep watching for updates. Thank you very much indeed for bringing us what we are seeing right now. Anthony DePaola, Bloomberg Middle East energy reporter. Let's talk more about what is happening here and what we should watch for next in some of these oil and gas stocks, and whether or not there are other effects that we're going to see. Michele Della Vigna, head of EMEA Natural Resources Research at Goldman Sachs, joins us now. Good morning. Let's start off with hydrocarbons, and then we'll kind of progress from there. What is your expectation now for what we are going to be looking at over the next few weeks, months, and potentially years in terms of the price of molecules that we all rely on, not only for energy, but also for plastics and all the other things that we are going to be looking at? Do we need to rebase ourselves at a significantly higher level for longer? And do you think the market's doing an adequate job of doing that?
I think everything is changing. I think just the lower oil inventories mean that oil price should be $20 higher than we previously expected, at least for the next 12 months. So in many ways, $80 is the new 60. And that is provided that everything comes back to normal in terms of transit. The gas oversupply we were expecting for 27 has been pushed back at least by 1 year. And there's been damage to pretty much 2 million barrels per day of refining capacity, which could take at least 12 months to come back. But more importantly, I think this is showing that the industry has been underinvesting in hydrocarbons for too long. So my sense is years after this, we will see as the key consequence a major revival of energy capex like we have not seen since before the shale revolution.
So you don't want to be buying the oil majors. Presumably you want to be buying the companies that supply the oil majors if we are going to see that push.
Definitely. Let's go back to the oil services. I think it is such an exciting setup for them. They've restructured, consolidated, and taken away capacity through 15 years of pain. And now we're going to see a major return of capex, especially in areas like deepwater. Not only the Strait of Hormuz is becoming more risky, but U.S. shale is peaking. I mean, shale is aging very gracefully, but is aging. It's no longer going to contribute that major growth it did in the past. So we need a revival of exploration where capex is still half of what it used to be, and deepwater. I think that's going to be the most exciting part of the energy space in the coming years.
Michele, if that's the case, though, it's going to take a while for that to happen. Are we going to see shortages in the near term before that capex kicks in and delivers?
I think there will be some shortages possibly in some areas in the next couple of months, in some airports on jet fuel, in some places on diesel, but those are going to be small and local issues as long as Hormuz reopens in the coming weeks. I don't think we will see actual shortages in the medium and long term, but I think we need to see the back end of the oil price going up because it is underpriced and it is not justifying enough investments to continue to have non-OPEC growing through the end of the decade.
Michele, why do you think countries will invest in hydrocarbons and companies will invest in hydrocarbons when they could be investing in renewables?
I think we need both. We clearly need both. I think renewables are badly needed for security of supply, especially in Asia and in Europe. I think we need more investment in the grid to better connect the parts of Europe which are not connected at the moment, right? Solar in Iberia, with nuclear in France, with hydro in the Nordics and offshore wind in the UK. And then we will need nuclear and fusion. But all of this is not enough. We also need enough gas to support the stability of the system, especially seasonally, and we will need more cheap oil because oil demand in our forecast will grow for the next 20 years.
Michele, you said a moment ago that the floor for oil prices is $20 higher. What is the ceiling? Where's the ceiling? How high could we go?
So our view is that if there is one more month of closure in Hormuz, oil price will go back to $100 per barrel. And effectively, every extra month of closure is an extra $15 to $20 simply because of the lower level of inventories, which starts to become dangerously low. If we were to estimate the absolute peak, we have updated some of our analysis of demand rationing pricing. If we update it for inflation, what we saw in 2007 and 8, we would need to go towards the $200 per barrel. We don't think it's needed. There would be several months of Hormuz closure. Hopefully, we don't need to get there.
It's good to have a model, though, to work with. Thank you very much indeed for providing one. Michele, Della, Head of EMEA Natural Resources Research, joining us from Goldman Sachs. Coming up, we're going to turn to private credit. Craig Nicol is going to be joining us, Head of Credit Strategy at Sona Asset Management. Private credit, absolutely front and centre as well. Redemption requests, they just keep piling up. What do they mean? We'll find out next. This is Bloomberg.
The result of the American presidential election created a new reality. In Europe, everyone must adapt their own destiny and their own policies to this.
I also want to send my best wishes to Prime Minister Viktor Orban, who I am endorsing.
And it's important to understand how important the relations between leaders are to the relations between countries.
He's a fantastic guy, and it's such an honor to endorse him. I endorsed him last time he won, and he did a fantastic job.
I've seen a guy who has ferociously advocated for the interest of Hungary. I'm here to help him in this campaign cycle.
We want this economy to prosper. We want this country to do well. It's in our national interest, especially as long as you're the Prime Minister and the leader of this country.
Mr. President, you are on with about 5,000 Hungarian patriots, and I think they love you even more than they love Viktor Orban.
Well, I can't believe that. I can't believe that because I love Hungary and I love that Viktor.
US officials from the top down expressing their support for Hungary's current Prime Minister, Viktor Orban. This ahead of this weekend's elections that are going to be taking place. US officials joining some other European leaders, many, of course, from the far right, supporting Orban ahead of these elections. Bloomberg's big take looking at how the vote could, though, end the populist premier's long tenure. For more now, we're joined by Bloomberg's Budapest bureau chief, Thomas Eskrit. Thomas, let's talk about kind of what is actually happening on the ground. Despite all the support we're getting from the United States, Orban's on the ropes. So why is this happening? Why such a change within the Hungarian population? And why? What is driving this shift?
He's had a very long run in power, as you said, and we've come to a moment where the broader economic environment for him is no longer so benign, and that has and the structural problems in the economy have led to a period of very slack growth, and that's combined with, I think, a certain anxiety about the country's positioning in the war. With regard to Ukraine, Orban has positioned himself as one of the as the foremost champion both of Russia and of the US in the European Union, and that, I think, has certainly caused some discontent within his own party, and that's created a space for this challenger, Peter Magyar, to emerge. More than that, I think there's also a real sense of anger about a long period in which it was felt that a small group of people were growing richer in his system. Members of his own family, in many cases, were getting were being enriched, were really enjoying the spoils of the economy, which was structured to benefit him and him and the party around him. So for all of these reasons, there's a lot of discontentment. He made a huge bet on bringing in giant Asian auto suppliers and car makers. Those bets haven't really paid off, partly because of slack demand in Europe and partly because of a series of scandals where it turned out that environmental standards weren't being applied, and frankly, there were allegations of people being effectively poisoned in battery plants, and this again caused real anger in the population at large. And now 16 years is a very long time, and there is real sense of fatigue, I think, and a desire for change. Whether that will actually play out in the elections, it's unclear so far.
And we're going to look forward to all the coverage that we're going to get from those elections. Bloomberg's Budapest bureau chief, Thomas Eskrit, thank you very much indeed. OK, let's turn from the politics back to the markets and talk a little bit about one of the other risks that is out there right now. The $1.8 trillion private credit market is being hit with record redemption requests, particularly from private individuals. My next guest argues the, quote, golden age for private credit is firmly over and is entering a moment of reckoning where underlying financial stress is currently being masked by maybe a little lack of transparency and creative accounting within the sector. Craig Nicol, head of credit strategy at Sona Asset Management, joins us now. Good morning.
Thank you for having me.
Do we have a problem?
Potentially, yes. As you say, I think the private credit market is going through a period of reckoning. It's playing out so far in the kind of private perpetual BDC world. We've had massive redemption requests there. I think, however, and that in itself is certainly a problem, and I think that will kind of continue and persist through at least the remainder of this year. But the reality is that's kind of masking bigger structural problems that have kind of been building under the surface for private credit. And I think up until now, they've largely been masked over because the market has been able to grow at an incredibly strong rate.
Yep.
As you say, it's a $1.8 trillion market. If you only look at the kind of non-IG part of it, which has roughly doubled over the last 5 to 6 years, you've had pretty good returns over that period for the most part. And I think probably the most important thing is the opacity of the asset class has effectively acted as a bit of a volatility dampener kind of years gone by. And I think ironically what we're seeing today... Well, yeah, but I think ironically what we're seeing now is that has kind of done a full reversal, and I think it's this very opacity which is driving a lot of the fears among private credit today, and hence why we're seeing these huge redemptions.
From what happens next, I'm presuming, depends on what the economic cycle does. Is that the biggest variable now? If we get a tough economic cycle, presumably a lot of the portfolio companies that are kind of within the structures are really going to feel the pressure, particularly at the bottom end.
Yeah.
Is that the biggest determinant now of what happens next?
It is a determinant, and I think it plays a very big role. But look, I think the reality is the private credit market, unlike, say, public markets, hasn't really gone through true cycles.
Yeah.
We've effectively just had one big elongated cycle within private credit, and you've had huge amounts of growth within that. I think what we're seeing now is clearly the biggest problem with private credit is its exposure to software.
Yep.
It goes beyond that, though. You can look at kind of broader AI disruption. You know, we've kind of estimated that we think about 60% of the private credit market is asset light in some form or another, which is substantially higher than what you see in public credit markets. And I think the realization is we are just going to have higher losses in the foreseeable future.
Right.
And those will be higher losses. That will be a function of both higher default rates, but also significantly lower recovery rates. You know, I don't think it's unreasonable to say that for a lot of these software names, the recoveries could be, you know, anywhere from 0 to, say, 30 cents on the dollar.
Wow, OK. 0 is a fairly bleak number, to say the least. So it's not just the economic cycle, it's AI as well. Does what starts in private end up in public? Is that kind of, how does that mechanism work?
Yeah, I think the risks are definitely kind of contained within the leveraged finance ecosystem. And I struggle to see a scenario where if we do see meaningful stress in the private credit market, which involves some sort of decent repricing, that public credit markets are completely unscathed from that. And, you know, I think what we're seeing today is the lines have blurred between public and private credit markets. That's been happening for the last kind of 3, 4, 5 years. We have managers which obviously span both. We have investors which span both, but we also have constituents within both markets. You know, they may have a capital structure which bridges both public and private credit markets. And so I think the stress would permeate through the entire leverage.
Is the insurance the connection? Is the insurance sector, which has a particularly tight connection with this space, the connection, just briefly?
Yeah, the insurance side of it plays a very, very big role. You know, the huge growth in the market in terms of capital has come from the insurance sector predominantly, and that has driven a lot of this kind of interconnectedness between the two.
Great stuff. Thanks for the update. Really appreciate it. Craig Nicol, Head of Credit Strategy at Sona Asset Management. That wraps up. We've got like a kind of minute and a bit to go. Let's just quickly talk about what's happening in the markets right now. At the moment, we're kind of marking time. US futures are a little softer. Big rally yesterday. We're not completely unwinding that. So you've got big weekend talks coming up. You've got inflation data coming towards us as well. The Masters is on as well if you're looking for a nice distraction. But the next few days are going to be quite busy. Anyway, that's where we are with the markets. The brief is coming up next. We'll do this all again tomorrow. This is Bloomberg.